Hello, this is Mike Waterman with Shop Squawk. In this lesson from the Financial Literacy curriculum, we're going to talk about credit. Your credit is a measure of your financial reputation, which often translates into how much money and at what interest rate financial institutions are willing to lend you. Credit takes time to build, requiring a history of financial transactions. These transactions are recorded in credit reports, which are maintained by three main credit agencies, including Experian, Equifax, and TransUnion. Your credit report is available to you for free once every 12 months from each of these agencies. You should definitely take advantage of this. When you get your credit report, there are certain things you need to look out for. You want to make sure your credit report reflects your actual financial history and is free from fraud. Fraud is when someone transacts using your credit without your authorization. Fraud may be more prevalent than you think. In addition to looking for fraudulent transactions, search for inaccurate or missing information, such as accounts that don't belong to you, wrong addresses, wrong employers, or anything that doesn't look right. Another important piece of information in your credit report is your credit score. Your credit score is essentially a measure for lending institutions to assess the likelihood that you will repay your debt. If a bank loans you $10,000, it gives them an idea as to how much they should trust you to pay them back their principal and interest. They don't know you personally, so they use this objective measure to assess the risk. Credit scores range from 300 to 850. Roughly speaking, 800 to 850 is excellent. 730 to 799 is great. 680 to 729 is good. 580 to 679 is fair. 500 to 579 is poor. And 300 to 499 is very poor. Chances are, if you're young, then you have no credit history, and thus you have no credit report or credit score. If that is the case, then there are ways for you to build your credit from scratch. Establish a relationship with your local bank by opening a savings account. Making frequent deposits will let the bank know that you aren't spending all your money. Knowing this, the bank will likely be more open to giving you credit, such as a credit card. If you are renting a place, you could also put utilities in your name. Consistently paying this on time will help you establish credit. You could also obtain a secured credit card. With a secured credit card, your credit is guaranteed by an underlying asset that you own, such as a car. If you fail to pay the loan, the institution can confiscate your asset, sell it, and pay off your debt. If you undertake this method, be sure the lender reports your payments to the credit agencies, as some do not. Note that a secured credit card is different from a prepaid card. Lenders will not report prepaid cards to the credit agencies. Probably one of the better ways to establish credit is to get someone to co-sign a loan for you. The co-signer, who typically has good credit, guarantees the loan repayment. If you miss a payment, then they will be on the hook. If the loan remains in good standing, your credit will benefit. Finally, do not keep applying for credit if you keep getting turned down. This looks bad and will only worsen your credit. If you already have credit, there are actions you can take to improve it. Keep your loan balances manageable and well under the credit limits. The ratio to look at here is called the debt-to-credit ratio. It measures how much debt you're taking on relative to the maximum amount of debt you can take on. You want this ratio to be as low as possible. Also, don't exceed this credit limit on your credit card accounts. When you borrow, you want to make the lenders aware that just because you can borrow doesn't mean you will borrow or have to borrow. Pay all your bills on time and make sure you pay at least the minimum required on all accounts. Failure to do so will cause lenders to think you are struggling financially or that you are simply irresponsible. Monitor your credit report regularly, checking for accuracy. Don't let some fraudster ruin your credit you've worked so hard to build. Don't apply for a lot of credit or check your credit too much in a short amount of time. Too many credit inquiries will make lenders very nervous. Finally, don't file for bankruptcy or let any debts go to collections. Negative marks on your credit, such as late payments, bankruptcies, can remain for 7 to 10 years. There are many benefits to having good credit. Lenders will trust you more, and that will translate into lower interest rates on loans and credit cards. People with higher credit are more likely to be approved for renting apartments or houses. Having good credit can even allow you to get your dream job. You need good credit to land a job with top secret security clearance in the government and higher level financial jobs. The reasoning is simple. People in financial difficulty are more likely to take bribes or steal in order to better their financial positions. The takeaways on credit are as follows. Your credit is critical to your financial well-being, so keep tabs on your credit report and credit score. Look for ways to improve your credit and avoid doing things that can damage your credit. Your future is bright if you have good credit.